Welcome to the deep dive. Today we're jumping into the AI stock market, specifically looking at a couple of companies that one source is flagging as potential opportunities on the dip.
Yeah, and our source for this is just one article. It's from The Motley Fool, and the title is Two No-Brainer Artificial Intelligence AI Stocks to Buy on the Dip.
Okay, so mission is clear then. We're basically unpacking just this article, trying to understand why it singles out these two companies based only on what's written there.
Right, strictly sticking to the source.
Mhm.
So to kick things off, the article kind of sets the scene. It talks about AI stocks taking a pretty big hit back in April.
Uh-huh.
And it suggests part of that was due to these things it calls Liberation Day tariffs, sort of frames it as a wider market thing affecting tech.
Got it. So like an external shock mentioned by the source hitting the sector.
Yeah.
But then didn't things bounce back?
They did, yeah. The article says the market mostly recovered in May. You had some big names like NVIDIA, Palantir getting close to highs again, or even setting new ones. But, and this is the key point for the article, despite that recovery, it argues there are still some AI stocks out there that are basically on sale. And it sort of backs this up by saying, look, the overall AI boom isn't slowing down. Big tech is still pouring billions into data centers specifically for AI.
Right. So the underlying investment is still huge. The picture the source paints is like a temporary dip, maybe triggered by those tariffs, then a recovery, but leaving some potential bargains behind.
Exactly. That seems to be the setup.
Okay, so which company does the article focus on first for this buy on the dip idea?
First one up is Amplitude. The ticker is AMPL.
Amplitude. Okay. What's their deal, according to the source?
Well, the article describes them as a SaaS company, software as a service. They focus on product analytics, so helping companies understand how people are actually, using their websites or apps.
Ah, product analytics. And the source mentions their recent history, right? Something about a pandemic boost.
Yeah, that's a big part of this story it tells. Says they had this boom during the pandemic, but then it sort of faded. Companies started scaling back their tech spending, and Amplitude's growth slowed down.
So they hit a rough patch. How did they respond, according to the article?
It says they had to regroup, and they've apparently built out their platform quite a bit, added new tools like guides, surveys, session replay, stuff to help clients really get granular on user interaction and figure out how to make their products better.
Okay, makes sense. And now the AI angle comes in. The article highlights something specific happening soon.
Yes, exactly. This seems to be a key reason the article is highlighting them now. They're launching AI agents supposedly on Juneteenth.
AI agents. What are these supposed to do, based on the article's description?
The source suggests they're designed to give Amplitude's customers deeper insights, maybe even suggest specific changes to their products.
Suggest changes.
Yeah, and it gives a pretty striking example. It claims these agents could potentially create, hundreds of different website variations for A/B testing, just automatically.
Wow, okay. Hundreds. That definitely speaks to the potential scale the source sees there.
Yeah.
Does it give any other context on Amplitude's position in the market?
It does. It mentions their market cap is around $1.6 billion, which, isn't tiny, but it puts them up against giants like Google Analytics and Adobe Analytics.
Big competitors.
But the article frames that competition as potential. Potential for Amplitude to grab more market share, maybe because they're smaller and more focused.
Interesting angle. So seeing the competition as an opportunity. And what about the stock itself? That's crucial for the dip argument.
Yeah, the article is very specific here. It says even though the stock has gained a bit this year, it's still down, wait for it, 85% from its all-time high.
85%. Okay, yeah, that really drives home the dip part. So just based on this source, it's that huge historical drop plus this new AI agent launch. That's the argument.
That seems to be the core case presented in the article for Amplitude. The past performance plus the potential future from AI.
All right. Makes sense based on the source's logic. Who's the second company the article picks?
The second one is Upstart, ticker UPST.
Upstart. Now, their business is pretty different, isn't it? The article describes them using AI for credit scoring, disrupting FICO and stuff.
Exactly. They're a credit platform using AI to assess risk differently than traditional methods.
And the article presents a similar kind of story for their stock, right? Like Amplitude.
Very similar trajectory in the articles telling huge surge in 2021, pandemic tailwinds helping them out, then bam, crashed hard. The source blames rising interest rates and recession fears hitting the lending market.
Okay. And the article really leans into their AI tech, doesn't it? Mentions a specific model.
It does. Talks about their latest model, Model 18, and claims it makes up to 1 million predictions for each loan applicant.
1 million predictions per person. That sounds like
Yeah.
a lot compared to traditional scoring.
Definitely implies a much deeper level of analysis. And the article directly connects this AI tech to results. It claims the model leads to fewer defaults and more approvals, all while keeping the risk level the same for lenders.
Fewer defaults and more approvals. That's the holy grail for lending, right? Does the article provide numbers to back that claim up? Recent numbers?
It does, yeah. Points to the first quarter. Says their conversion rate, so apps turning into actual loans, jumped pretty significantly from 14% up to 19.1%.
19%, okay. That's a decent jump. What about revenue?
Revenue was up strongly too, according to the source, 67% year over year, reaching $213 million in Q1.
Nice. And the bottom line, profitability.
That apparently improved dramatically as well. The article highlights adjusted EBITDA, that's earnings before interest, taxes, depreciation, and amortization, kind of a proxy for operational cash flow. It was positive $42.6 million in Q1. Compare that to a loss of $20.3 million the year before.
Wow, quite the turnaround on that metric.
And the source even expects them to deliver a GAAP profit, that's the standard accounting profit, for the second year in a row.
Okay, so the article's argument here is that the AI isn't just fancy tech. It's actually driving tangible improvements in key financial metrics.
Yeah.
That seems to be the core point.
Yeah, linking the tech directly to the improved performance.
Does the source mention anything else about Upstart's strategy? Are they just doing personal loans?
No, it highlights their expansion efforts. Says they're pushing more into auto loans and home loans.
Diversifying. And are those segments growing? Does the article give numbers?
It does. Says auto loan originations were up 5 times compared to the previous year, hitting $61 million. And home loans grew 6 times to $41 million.
5 and 6 times growth.
Okay.
Small base maybe, but fast growth.
Right. And the source adds a point that these kinds of loans, auto and home, are often seen as more attractive, maybe less risky, for their lending partners compared to the unsecured personal loans they started with.
Interesting. So the diversification could be seen as reducing risk too, potentially? Okay, and finally, Upstart stock price. How does that fit the dip narrative according to the source?
Similar story to Amplitude, just slightly different numbers. The article states the stock is down 44% from its 52-week high and 87% from its all-time peak.
87% from the peak. Okay, So again, a massive drop from its highs.
Yeah.
So for Upstart, the article's case seems to be look at this huge drop, but also look at these recent improving financials that we, the source, attribute to their AI. Therefore, potential buy on the dip.
That sums up the article's argument for Upstart pretty well.
Okay, so if we step back and look at both, based purely on this one source, the common thread is they both had these massive peaks during the pandemic era, then huge crashes.
Right, big drops from their highs.
And the article highlights them now because of their current strategies, specifically involving AI. For Amplitude, it's the potential of the new AI agents. For Upstart, it's the alleged results the AI is already delivering.
But the way they're using AI is quite different, as presented in the article.
Yeah, totally. Amplitude's AI, according to the source, is about generating insights for product development, understanding user behavior.
Whereas Upstart's AI is all about the core business of assessing credit risk and making lending decisions.
So the article is basically showcasing two very distinct applications of AI in different business sectors, both presented as potential reasons why these stocks might be interesting now, given their price history.
Exactly. So what's the takeaway here for you, the listener?
Well, this deep dive really just explored one specific viewpoint from one source, the Motley Fool.
And just to reiterate, all the details, the arguments, the numbers, they came only from that single article we discussed.
Right. So the value here isn't us giving you investment advice, obviously. It's more about seeing how this particular financial analysis source goes about finding potential opportunities.
Yeah, you see their method.
Yeah.
They look at the market context, the recent corrections.
Then they zoom in on specific companies. They look at strategy shifts, especially these AI angles. Connect those shifts to performance metrics where they can.
And then place all of that in the context of the stock's price history, particularly how far it's fallen from its peak. That's their recipe in this article for identifying a potential buy on the dip.
So we looked at Amplitude, with its upcoming AI agents highlighted by the source, and Upstart, where the source points to improving financials driven by its AI model, both presented as potential buys on the dip because of that history and their current AI plays.
Yep, that's the story the article tells.
Okay, so as you go out and read or hear about other AI companies, maybe other potential investments, here's something to chew on, sparked by this analysis. When you're looking at a company leveraging AI, how much weight do you give to the actual technology itself, how cool or advanced it sounds versus the hard results? The financial performance, the customer wins, the stuff that shows the tech is actually well paying off.
hmm Is the potential locked up in the cleverness of the AI, or is it really about how effectively that AI is being put to work to generate tangible business value?
Something to think about.